So the expectation is a quarter point from Powell, and we should get this one out soon because it's dated, J-Dubs. The expectation is a quarter point from Powell this afternoon, and then maybe no more. How does the market respond to that?
So I think what they're looking for, or what is expected, is going to be a hawkish pause. So that's going to be JPow coming on, and they're going to have the 25 bips that we're expecting today, and they're going to say we will determine our future increases based on market conditions, but we are committed to fighting inflation. So they're going to leave the next increase on the table, because if they do that, I think the market reacts as if we're entering cutting territory sooner than they probably expect to be, because I think we are in a higher for longer future. But if there's any recourse given, or they mention a future bank epidemic on the horizon, that the equities market takes off, and we see a very huge fall in mortgage rates in the short term. But I don't think they allow that to happen. I think we're in the hawkish pause is going to be the mode.
So I wanted to ask you this question and share some information for a quick discussion. So how are you predicting your rates? Are you still seeing them dropping below by the end of the year, going down? Is that still your read on the 30-year mortgage?
I do, and I think there's a couple components there. I think if we do we've had, 4 major bank failures in the last 90 days. I think if that 4 were to go to 10 or 12, I think that the Fed's obligation would then be to turn the money printers back on in order to protect a greater economy, in conjunction with whatever this Mexican standoff between the president and whether or not we increase the debt limit or not, which is something that's going to happen no matter what, because we don't want to actually default on our national debt. That would create a global economic problem. So whatever happens there is a sideshow. Whatever happens here is the reality. And if we were to see multiple regional banks continue to fail, the Fed's obligation to protect that would be greater than their obligation to inflation. The money printers would turn back on, and we would see mortgage rates rapidly decline.
Tumble.
Now, the likelihood of that happening, I don't know enough to be that guy, but I would say that there's enough danger there that the market is somewhat pricing that in. So I do think that we continue to see mortgage rates decline throughout the year, and we get to a potentially, my original prediction of we put a 4 on it.
Really?
Whether it be 4.99.
He did say that.
Or we get into
the really is you're still feeling that way.
The reality is, I think
there's
that
a very specific
we're
reason
still
I'm asking you
trending in that direction. That is, everything is in line to have that continue.